In this episode, today we are going to talk about reclaimed order blocks. The name itself already reveals a lot, but we are going to dive a little deeper into how they form on the chart and how traders can identify them within market structure. So let's get straight into it. So first, we all know about order blocks, right? But did you know that an order block can actually be used multiple times by price, even after it has already reacted once? Most traders think that once an order block gives a reaction, it is finished. But that is not always the case. Price can come back to that same level again, interact with it, and still respect it. When this happens, we call it a reclaimed order block. In today's video, we are going to dive deeper into this concept. We will talk about what a reclaimed order block is, how it forms, and more importantly, how you can use it to understand market maker order flow and anticipate where the market may potentially reverse. Understanding this concept can significantly improve the way you read price action, because it helps you recognize when the market is still respecting a level even after it has already been used before. So without wasting any time, let's get straight into our first example. So, guys, let's dive into our first example. In this example, we are looking at US 30 on the 15-minute chart, and I have already marked out an order block on the chart. Normally, when price forms an order block, we expect price to react from that level. Since this is a bearish order block, the general expectation is that price should get rejected from it and move towards the sell side. And if we watch what price does, we can see that price indeed gets rejected from this order block. That part is very basic and most traders already understand it. But that is not the interesting part. If I extend this order block forward in time, you can clearly see that price actually reacts from this same order block multiple times, rejecting from it again and again and offering sell-side liquidity. Because price respects it so many times, this tells us that this order block is a very strong level in the market. Now the real concept appears when this order block finally gets broken. If we zoom in a little bit, you can see that price eventually closes a candle body above the order block. When price closes above the order block like this, something important happens. The same order block that previously acted as resistance and provided sell-side liquidity can now start acting as support. When this happens, we call it a reclaimed order block. So listen carefully to this part. When price closes a candle body above the reclaimed order block, it suggests that the market may now start offering buy-side liquidity instead of sell-side liquidity. And once we see that confirmation close, it also opens an opportunity for us to look for buy entries on the next candle. For example, suppose the next candle opens and we decide to buy from this level. Now let's see how price behaves. You can clearly see that price comes back down and finds support from the reclaimed order block, reacting very cleanly from the level. And when price returns to the reclaimed order block again, you can actually do one of two things. If you missed the first entry, you can enter on the second retest, or if you already entered earlier, you can pyramid your position and add another entry as price respects the level again. Now the next question is, where should our targets be? One simple approach is to take partial profits at nearby equal highs, which are sitting right here on the chart. After that, the main target can be the nearest draw on liquidity, which in this case is the swing high above. So we can place our take profit around this swing high while taking partials at the equal highs along the way. Also remember that we are currently looking at the 15-minute chart. If you drop down to the 5-minute or 1-minute time frame, you will often find multiple entry opportunities forming inside these candles. Now if we continue watching the chart, you can clearly see that price moves up and delivers buy-side liquidity, reaching the swing high area. At that point, we can take partial profits at the equal highs, and eventually price also hits the final take profit at the swing high. Now regarding stop loss, a common placement would be around the midpoint of the reclaimed order block, or slightly below it. Some traders also prefer placing the stop at the lower quadrant of the order block. So, to summarize the trade idea, the stop loss can be placed around the midpoint or lower portion of the reclaimed order block, partials can be taken at the equal highs, and the main target can be the swing high where liquidity is resting. And that's the complete structure of the trade. Now let's move on to our second example. In this example, I've already marked the order block on the chart, And you can clearly see that price initially respects this order block. When price returns to it, the level provides a reaction and pushes price towards the sell side. We even see another reaction from the same area again, which confirms that the market is respecting this order block. Now, if we extend this order block forward in time, you will notice something important. At this point here, price breaks above the order block. Once that happens, the nature of this level changes. The same order block that previously acted as resistance can now become support. And when this transition happens, the order block is no longer just a regular order block. It now becomes what we call a reclaimed order block. According to the rule we discussed earlier, once price closes a candle body above an order block, we can expect the market to start offering buy-side liquidity instead of sell-side liquidity. This shift in behavior also creates a potential buying opportunity. So once we see a candle close above the reclaimed order block, we can look for a buy on the very next candle. In this example, price does exactly that. We get a clean candle close above the reclaimed order block, which confirms the reclaim. Now suppose we decide to enter a buy on the next candle. From that point, the key thing we want to observe is whether price respects the reclaimed order block as support. And as you can clearly see, when price comes back to the level, it finds support from the reclaimed order block and moves higher. This confirms that the level is now functioning as support instead of resistance, validating the reclaimed order block concept. So folks, let's move on to our third example. In this example, I want to answer an important question. How can you anticipate when the market might reverse using the reclaimed order block concept? First, we all know a very common principle in trading. When price takes out a major buy-side or sell-side liquidity level, the market often becomes vulnerable to a reversal. Large liquidity sweeps frequently occur before the market shifts direction. Now, if you combine that idea with the reclaimed order block concept, it becomes a very strong confirmation for your trade idea. So here's the basic idea. When price takes out a major level of buy-side liquidity, you mark the last bullish candle before the move down. In this example, this candle here is the last bullish candle before price starts moving lower. Now, if we are expecting bearish price action, the confirmation we want to see is a candle closing below that last bullish candle after the liquidity has been taken. Let's see what happens on the chart. You can clearly see that after the buy-side liquidity is taken, price closes a candle body below the last bullish candle. When that happens, the level effectively becomes a reclaimed order block, and that gives us a potential short opportunity. Once we see that close below the level, we can enter the trade on the next candle. Now the next step is identifying our target. A simple approach is to target the nearest liquidity level. In this example, the closest liquidity is sitting at this swing low, which represents sell-side liquidity. So let's see if price actually moves toward that area. If we enter on the next candle after the confirmation close, we simply allow the trade to develop. Remember, in replay mode, things may look fast, but when you are trading live, you will usually have enough time to identify the candle close and execute the trade. Now, if we continue watching the chart, you can clearly see that price aggressively moves downward and delivers sell-side liquidity, reaching the swing low target. Now, the next question traders often ask is, where should the stop loss go? If you are entering the trade here, you have two common options. One option is placing the stop loss just above the last bullish candle. This is a more aggressive stop placement because it keeps the stop tighter. The safer option is placing the stop loss above the swing high. That gives the trade more room to develop and usually provides a lower risk of getting stopped out. If you are targeting the nearest liquidity level, this trade could easily provide around 2R. And if you aim for a deeper target, such as internal sell-side liquidity further below, the trade could extend to around 3R or more. All right, so that is the concept of reclaimed order blocks and how you can use them to understand market maker order flow and potential reversals in the market. The key idea is very simple. An order block does not always lose its importance after the first reaction. When price breaks through it and closes above or below it, that same level can flip its role and become a reclaimed order block, providing support or resistance again. When you combine reclaimed order blocks with liquidity sweeps and nearby drawn liquidity levels, it can give you a much clearer understanding of where price is likely to move next. If you practice identifying these levels on your charts, you will start to see how often the market respects reclaimed order blocks and uses them to continue the move. If you found this video helpful, make sure to like the video, subscribe to the channel, and share it with someone who wants to improve their understanding of price action. And as always, I'll see you in the next video.